Orlando real estate market about to crash? Shocking predictions revealed. The real estate market is often unpredictable, with cycles of growth and decline affecting home buyers, sellers, and investors alike. As one of the most dynamic housing markets in the U.S., Orlando has experienced rapid price increases, high demand, and strong investment interest in recent years. But with fluctuating interest rates, inflation concerns, and economic uncertainty, many are wondering, is the Orlando real estate market about to crash? Let's explore some of the key factors influencing the market and what experts predict for Orlando's future. Let's take a look back. Orlando's recent real estate boom. Orlando's real estate market has been on a tear over the past few years, fueled by a booming tourism industry, population growth, and low interest rate. Demand for homes skyrocketed. The city became a hotspot for families, retirees, and investors alike. Attracted by affordable prices compared to other major cities, job opportunities, and a strong rental market. From 2020 to mid-2023, home prices in Orlando surged with double-digit percentage increases year over year. Bidding wars became the norm, with homes selling above the asking price in record time. Investors from out of state and internationally saw Orlando as a prime opportunity, driving even more competition. But what goes up must come down, right? As we enter the latter half of 2024, many are asking if the market is poised for a major correction or even a crash. Will Orlando's real estate market crash? Let's look at the data. While it's impossible to predict the future with certainty, several factors can help us assess the current state of the Orlando real estate market and whether a crash is on the horizon. Number one, interest rates and mortgage costs. One of the most significant factors affecting the real estate market in 2024 is rising interest rates. As the Federal Reserve increased rates to combat inflation, mortgage rates followed suit. This made borrowing more expensive, pricing some buyers out of the market or reducing their purchasing power. While rising mortgage rates could cool demand and slow price growth, this doesn't necessarily mean a crash. Rather, it may lead to a period of market stabilization where prices grow at a more moderate pace, or even experience a slight decline as affordability becomes a concern for some buyers. Number two, inventory levels in Orlando's housing market has been tight for the past several years, contributing to a rising home price. A shortage of available homes combined with strong demand created a highly competitive market. As of late 2023 and early 2024, inventory levels have begun to rise, but they may remain low compared to pre-pandemic levels. While increased inventory may provide some relief for buyers, experts predict that we won't see an overwhelming flood of new homes that could cause a sharp drop in prices. Builders are still dealing with high construction costs, supply chain issues, and labor shortages, which limit the speed of new housing developments. Number three, demand remains strong. Orlando's population continues to grow. People are moving to the city for its job opportunities, favorable climate, and relatively affordable cost of living compared to other Florida metros like Miami and Tampa. With continued in-migration, particularly from higher cost states, the demand for housing remains robust. Experts predict that Orlando will see consistent demand from home buyers and investors, which could prevent any drastic market corrections. Additionally, the rental market remains strong, attracting investors who view Orlando as a profitable location for rental properties, especially with the city's booming tourism industry. Number four, economic resilience. Orlando's diverse economy is another stabilizing factor. While the city is known for its tourism industry, hosting millions of visitors each year at Walt Disney World, Universal Studios, and other attractions, it's also a growing hub for tech, healthcare, and education sectors. This diversification of industries means that Orlando is less vulnerable to economic downturn than cities that rely on one industry. Even if the national economy faces a slowdown, Orlando's multifaceted job market can provide some insulation against a severe crash in real estate. Now, possible scenarios for Orlando's real estate market in 2024? While it's unlikely that Orlando will experience a full-blown housing market crash, several scenarios could play out over the next year or two. Scenario 1, gradually cooling. The most likely outcome is a gradual cooling of the market. Rising interest rates and increased inventory could temper price growth, leading to a more balanced market. This would mean fewer bidding wars, more time for buyers to make decisions, and a modest price increase instead of the sharp spikes seen in previous years. Home prices might dip slightly in certain areas or stay relatively flat, but a significant crash is not expected. Scenario 2, short-term corrections in overheated areas. Some neighborhoods or areas of Orlando that saw particularly aggressive price increases could experience short-term corrections. These could occur in places where prices were inflated due to excessive demand, especially if those areas are more dependent on investor activity. However, these corrections are likely to be small and temporary, not indicative of a broader market collapse. Scenario 3, continued growth in certain sectors. Orlando's rental market, second home market, and vacation property sectors may continue to see strong demand and growth. Investors who view Orlando as a prime location for rentals may keep prices elevated in these segments, particularly in areas near tourist destinations or popular suburbs. Additionally, if tourism remains strong, short-term rental demand will likely continue to drive prices in some areas. What should buyers, sellers, and investors do? If you're a buyer, seller, or investor in Orlando, the current market requires a strategic approach. Buyers. Rising mortgage rates mean your budget might not stretch as far as it did a year ago, but increased inventory could present more opportunities for you to find the right home. Consider buying now before rates increase further and focus on areas with strong growth potential. Sellers. While prices may not continue to rise at the same pace, there is still strong demand, particularly for well-maintained homes in desirable areas. Now could still be a good time to sell, but setting realistic expectations about pricing will be key. Investors. Orlando remains a solid option for long-term investment, especially in the rental market. Focus on neighborhoods with growing infrastructure, proximity to job centers, and amenities that will attract both renters and future home buyers. No crash, but a shift to stability. The Orlando real estate market is unlikely to crash in the near future, but we're already seeing signs of stabilization. The era of skyrocketing prices and fierce bidding wars may be cooling, but the underlying fundamentals, strong demand, a growing economy, and low inventory remain intact. Buyers and sellers alike should approach the market with realistic expectations, knowing that a healthy market correction is part of maintaining long-term stability. If you're looking to buy, sell, or invest in Orlando, now is the time to consult with a real estate expert who can help you navigate this shifting landscape and make an informed decision.